Hello, everyone. In preparation for exam two, I uploaded the study guide and I uploaded the solutions to the study guide to the course. I want to go through a few of the questions, just make sure that everyone feels that they're properly prepared. So we can walk through a couple of them. Okay, which of the following items will result in increase in gross income? Receipt of a $10,000 check from the bank. The check is for a student loan. Doesn't seem like that's a real one. Preparing a mechanic's tax return in exchange for mechanic replacing the muffler in the car. Services in exchange of money would still be taxable. Payments can be receiving a $10,000 award from the university for high grades and high SAT scores. The award is used to pay tuition. Expenses relating to tuition generally not included. And then I'm going to go B. While payments received because a person has been physically injured are excluded from gross income, payments on account of non-physical injury must be included in gross income. That's be true. Amounts collected under accident health insurance policies purchased by the taxpayer are excludable from excludable be the key word there. Go true. Value of health, accident, and disability insurance premiums paid by an employer are generally not included in employee's gross income. That's true. Working condition fringe benefits, such as memberships in professional organizations paid for by the employer, are generally excluded from the employee's gross income. True, fringe benefit. During the year, Kathy received the following: dividends of $4,000 from Lindsay Corporation. Kathy's father owns the stock and directed the corporation to send the dividends to Kathy. It's important. Car worth $30,000 for being the 1,000th customer at a car dealership. Okay. $5,500 cash gift from her uncle. Gifts generally not included as taxable to the giftee. And $10,000 inheritance from her grandfather. Also, what amount must Kathy include in gross income? So the dividends of $4,000 from the Lindsay Corporation. They're in her dad's name, and he gave them to Kathy. So I'm thinking the only one we really need to include would be the $30,000. Prizes and awards generally in gross income. Right. Alyssa sued her former employer for discrimination. She was awarded $200,000 for lost wages, $30,000 for medical expenses related to emotional distress resulting from discrimination, and $300,000 in damages. Taxable amount is punitive damages, including gross income, lost wages, generally including gross income. The only one that would be the 30,000 for medical expenses, especially since it's related to emotional distress. So I'm going to go 5. All right. John is injured and received $16,000 of income from disability policy. John's employer paid 75% of the disability policy premiums. John paid the remainder. In addition, John's employer has paid all the $3,000 premiums on health policy that John's doctor bills of $10,000. How much of the benefits must John include? So the last section of this is in this. He doesn't recognize that. He does have to recognize the fact that the employer paid 75% of his disability. So if I take 16,000 income, 75, 12,000, you should recognize $12,000. Jordan paid $30,000 for equipment 2 years ago and has claimed total depreciation deductions of $15,600 for 2 years. The cost of repairs during the same period was $2,000, while a major overhaul, which extended the life of the equipment, cost $7,000. What is Jordan's adjusted basis in equipment at the end of the 2-year period? Here, we've got his original purchase price of $30,000. He's already claimed $15,000. Cost of repairs was $2,000. $2,000 that would be a deduction, right? It doesn't get added to the basis. 7,000, which extends, oh, 7,000 plus 15,600 plus 7,000. 21,400. He's got to capitalize the 7,000 that improved the life, but the 2,000 just deduction. Courtney sells a cottage at the lake that the family had used for their summer vacations. The purchaser paid Courtney $100,000 and assumed the mortgage would check principal balance of $50,000. Courtney had purchased the cottage 5 years ago for $107,000. Courtney will recognize. So she had $100,000 in the principal of 50. So her basis in it is 100. She sold it for 107. So she lost 20,000. What's important is that this is a personally held property. You don't recognize losses on personally held property. She would not recognize a loss. Remember the next one. Rachel holds 110 shares of Bargain Mutual Fund. She's planning to sell 90 shares. Her record of the share purchases is noted below. What could be her basis for the 90 shares to be sold for purposes of determining gain? So see that, remember, April 1st, got 100 shares for $100, you're investing. You might not remember this slide, but unless you specifically say these are the shares that I'm selling, you can kind of use a mix because it's not specifically noted and it says what could her basis be. It could be any combination. Gail gave property with a basis of $16,000 to Sarah and it had a fair market value of $12,000. I already don't care the fair market value because he gifted it to her. So it gets carryover basis. Gail, Sarah's basis is 16,000. Fair market value, no gift taxes were due. Sarah later sold the property for $22,000, resulting in a gain of $6,000. In a community property state, jointly owned property left to the surviving spouse will have a basis after the estate is settled equal to. So this is community property state, which is going to be different from common law. The community property state would be the fair market value. Common law, it works a little bit differently. It's going to be half the basis plus half the fair market value. Another question. Stella has two transactions involving the sale of capital assets during the year, resulting in a short-term capital loss of $5,200 and a long-term capital loss of $24. As a result, Stella can offset $7,600 ordinary income. Doesn't sound right. $5,200 of ordinary income and have a long-term capital loss carry forward of $2,400. Doesn't sound right. So we're looking at C or D, right? You can't offset more than 3,000. That's the greatest loss you can recognize in a given. So $3,000 of ordinary income and have a $4,600 short-term capital loss carry forward, or $3,000 of ordinary income and have the 2,200 short-term carry loss carry forward, and 2,400 long-term capital loss carry forward. So we would know that if you're going to recognize a loss, the IRS says, okay, let's make this beneficial to the taxpayer. Short-term capital losses are not as good of a deal as long-term capital losses. So they say, okay, you know what, you guys can offset short-term capital losses. So she's going to have carry forward from 2,200, going to carry forward all of her long-term capital losses. Let's try another one here. In order for an expense to be ordinary, it must be reasonable in amount and must be fair or reasonable and have a close connection to the income producing activity or profit. It's true. It's got to be related. Yeah. Tori considered opening a cupcake store in Denver. Tori's currently a full-time dentist. After spending $8,600 on a market study, he decided against opening the store on August 1st. What is the maximum amount of deduction for the current year attributed to this expenditure? So Tori's a full-time dentist and does not have a business. He was looking at opening a business, but he doesn't have a business to offset any of these expenses. He doesn't get to claim any, right? It's got to be business related. There is no business. Yeah. Carl filed his tax return, properly claiming the head of household filing status. Carl's employer paid or provided the following to Carl: wages of $65,000, fair market value of qualified defendant care services 4,000, premiums for $50,000, qualified term life insurance 500, and medical insurance premiums of 6,000. How much of this income should Carl report, assuming benefits are provided on a non-discriminatory basis? Well, he's only got to include the wages. Everything else would not be included for Carl. We're going to 65,000. All right, this one again. Jimmy owns a trucking business. During the current year, he incurred the following: gasoline and oil of $100,000, maintenance of $50,000, fines for speeding of $8,000, and bribes to government inspection officials of $21,000. The fines for speeding were necessary cost because missing deadlines would cause lost business in our ordinary industry. What is the total amount of deductible expenses? So fines, they're not deductible. It doesn't matter if Jimmy tries to explain that I had to do it. Fines are not deductible, nor are bribes to government inspection officials. So the only deduction he has is gasoline and oil and the maintenance, 150. Okay. I just want to go over a couple of the questions, give you guys an idea of what this might look like, along with some explanation to some of them. I'd recommend trying to work your way through this. There's no points deducted if you get something wrong. It just kind of helps you understand it a little bit better. If you have any questions relating to some of the questions on here, feel free to shoot me an email. We can go over it, try to explain it. That's all I've got for this video. All right, thanks everyone.